So well, I guess firstly, Tim, thanks for taking the time, man.
Anytime. Good to see you.
And yeah, you too, mate. You too. Still, like I was just sort of saying, I always do like to get your guys' insights from Hotspotting. I know we had a chat obviously the start of the year, and obviously saw you at the Pepper Awards as well, which was cool. Yeah. But I guess first thing off the rank here is now obviously us being in WA, a lot of our clients are in WA and kind of scattered around the country. I think at the moment it does seem like there's a little bit of a obviously in one hand, we're pretty much going through a fairly big boom right now in terms of the property as a whole, which is fantastic. But on the other side of the spectrum, I'm also seeing a lot of negativity from people in terms of, I saw one article come out last week saying how the middle class is, being evaporated. You've got people really struggling to get into the market, first home buyers having to think about prices of $850 to $1 million to get in, which is obviously, it is scary for the guys who are out. So I guess first things first, mate. Look, how do you guys find the market at the moment, and what do you think the current challenges are with where things are at?
Yeah, so I suppose to address the first point, I think it's an Australia-wide thing. It's not just Western Australia where, we've seen, price escalation over the last 5-6 years that has been significant. And of course, there probably hasn't been a time in history where anybody said, hey, it's so easy to get into the market as a young person. But, the media headlines in recent years, it's been getting to the point where everything's unaffordable and, we'll never be able to, kids will never be able to get into the market and things like that. Now, whilst it is tough to get into the market, I also think that there's probably there's an element of it's never been easier for people to get into the market as well when it comes to certain products. We didn't have 5% loan opportunities and things like that 15, 20 years ago. There's a lot of products that will allow guarantor deposit schemes where you're avoiding lender's mortgage insurance. And of course, we've just had the new 5% deposit guarantor scheme as well, where there's no lender's mortgage insurance. So in order to get into the market, it is certainly easier. But I think what's changed is people seem to think that they all need to live in a capital city and they need to live in the $1 million suburbs. And that's not necessarily the case. So first and foremost, I think people's, certainly when we see the media headlines, they often use this figure, which is in order to get into the market, you need X amount. And they usually use a 20% deposit in a capital city like Sydney. And of course, that seems unaffordable. Well, we don't all need to live there. So that'd be the first thing I'd say. The second part would be that even when people are considering some of these new loan products, they do have to consider that whilst it's a great opportunity for you to get in with a lower deposit, it does mean that you've got a larger loan. And I think a lot of people are getting a rude shock when they start to see what a 95% LVR loan at the peak of their borrowing capacity looks like.
Yeah.
So that's probably to address the first part of your question. The second part I would say is in terms of what's happening around the market. We've just finished, around the country rather, we've just finished our spring edition of the Price Predict Index, which for your listeners, if they're not familiar with it, every quarter we analyse every market in Australia and give it a ranking like the property clock. Is it a rising market, declining market, plateau, etc.? So in terms of the latest analysis, what we've really seen is the emergence of new growth markets. So the report really identifies the rise of new growth markets, particularly in major capital cities like Brisbane, Melbourne and Sydney. These cities are experiencing a resurgence in buyer activity, and that's predominantly what we sort of monitor in the Price Predict Index. And the simple premise is if we see rising sales activity, quarter on quarter, it's a sign of demand. And obviously with stronger demand comes price growth. And the flip side of that, and I know you're sitting over in the Western Shores at the moment, but we have, been quoted many a time over the last sort of 12 months to say that we believe that for a lot of the Western Australian market, it has reached a peak in terms of sales volumes. Now, we can get misquoted sometimes to think that that means that the market's going to crash, and we've never said that. What we have said is we don't believe the growth can continue. And if you go back to, December 2024, Perth had seen 15% growth in the 12 months leading up to that. I think at the most recent August data, it's now sitting at about 7.9%, which means month after month we're seeing that dropping. And that's typically what our Price Predictor Index is able to predict. So things like unit demand is another one that's an interesting trend that we've talked about in the most recent edition of the Price Predictor Index, which is that, in a lot of capital city markets, 62% of capital city markets, in fact, units are actually outperforming houses on capital growth. And I think that's something that a lot of both buyers, agents, and so real estate professionals and also consumers are really struggling with, because for many years we've been taught if you want to get capital growth, you've got to buy a house and it's got to have some land. And the only thing that goes up is the land, and everything on top of it comes down. But that's changing, and as unpopular as our opinion on that is, it's not just an opinion. There's a lot of evidence to back it up. And what we're stating is that the only inevitable thing that happens in real estate is change. And if you understand that a change occurs and you react quickly, you can actually benefit very well out of some of these changes. And if it's not hard to understand why these changes are happening. When you look at unit markets, why are we choosing to live that way? Well, people are choosing the lifestyle, the lock up and leave nature, the community. Living here in Melbourne, I can assure you, security is high on the radar for people as well, and people are selling up homes because they like the safety of attached dwellings. We're also seeing, a lot of migrants that are moving to the country, and of course, they're not used to living on house and land packages. They're used to living in fixed dwellings like apartments. So there's large cohorts that are driving this, and then of course the big one is the fact that we've got such a discrepancy between house price and unit price, and that's dragging the price of units up.
Yeah, got it. Now, I mean, you did bring up the topic of Melbourne, because I would like to sort of talk about each city individually as well.
Yeah, sure.
Just because obviously they're all doing their own thing. But, I mean, look, Melbourne is definitely a city that we've been considering for quite some time. I mean, obviously the median price and what we can sort of get over there versus other states, obviously it's very cheap.
Yeah.
The main concern that we have, and I think most people have, is with the state government.
Yep.
In terms of, not only what they did during COVID and how they sort of responded, but more so the policy they've implemented since then, stamp duties and all the taxes that
land tax and compliance and
yeah.
I think you're being a bit harsh on them, Corey. They've only done 103 changes to their rental legislation in the last 5 years.
Oh, pinch of salt. Yeah. So I mean, I guess what's your view now? Look, overall, I guess my overall philosophy is I can't see, let me take a step back. So with where Australia is at in terms of the property market, and I am spreading this with a very general brush.
Mm-hmm.
Like, obviously over the last, say, 100 years, we've performed better than most other countries around the world, right? And it's just simply due to the fact that we've got a massive piece of land, we've got bugger all people, we've got obviously a huge growing economy. We've got a huge growing, job market. There's a lot of potential here. Say, for example, if we look at the same sort of landmass in the US, where they've got 350 million people, a lot of places in Europe, way more densely populated, and we've got a lot to grow, right? I personally can't see us and can't see the market really changing in terms of seeing that sort of growth happening for that, let's just say the next 50 to 100 years.
Sorry, can you clarify? Did you say you don't think it's going to continue, or are you saying you can't see it changing? It's going to continue that way?
Yeah, I can't see it changing, and I can see it continuing in the same sort of trend. Mm-hmm. Particularly when we look at the amount of migrants coming from, you name it, Asia, Middle East, Africa. I mean, look, they come here to do the same job, far better conditions, earn way more money. Like, we live in paradise. Let's be honest. Like, why? And look, I'm an immigrant too. So I mean, why wouldn't people want to move here and get better opportunities, right? And in a safer country. So I personally believe that it's an absolute no-brainer to really invest anywhere in Australia, right? Across the next, particularly long term. But obviously, my philosophy versus what we want to help clients do are probably two different things. I'm probably a bit more aggressive than most. And so, I guess a part of the concern we have with Victoria is, not only does it seem like government decision is probably the biggest variable when it comes to how property performs and has over the last, say 10 years since COVID, unfortunately. But, at the same time, I guess there is this kind of socialist sort of element with the state governments, and not just in Victoria, but, WA, we've probably got the second worst government in the country right now. But I guess it does, it does put a lot of people off and create a lot of fear for a lot. And there's a lot of clients we've been dealing with over the last, sort of 12 months. When it comes to proposing Victoria, do you guys have any concerns? And if you do have concerns, like what would you say your guys' concerns would be? Not only living there, but also having most of your recommendations come from the fact you guys are living on the East Coast and sort of, I guess, sort of seeing more than what we're probably seeing over here in WA.
Yeah. Look, there's a couple of different ways to answer that question. I think if we were to just keep the investor's hat on, and there's obviously a lot of other drivers when you're a homeowner and things like that. But if we were to keep the investment hat on, the first thing I would say is that, humans and especially property investors are like sheep, right? They just they chase whatever. Oh, that market's hot, let's all go there. And it's not just actual property investors. Actually, the industry as a whole has started doing that as well, which is a concern in a lot of regards. But the one that does alarm me at the moment is that people are buying in Melbourne and investing in Melbourne and regional Victoria on the simple premise that it looks affordable. Now, don't get me wrong, affordable markets all over the country have been outperforming a lot of the nation for many years, and we are big believers in affordability, but you don't go and buy into a market just because it's affordable. You need to look at all of the other factors, the economic drivers, the cost to hold, all these different things that come into any investment when you're doing your due diligence. Now, the thing is, right now, and this is anecdotal, that what we're hearing is that in most affordable markets of Melbourne, investors are out buying homeowners 4-1. And the majority of those purchasers have got a buyer's agent on the phone at auction bidding on behalf of their investor. Or if they're not, it might not necessarily be at auction, but most of these transactions are happening via buyer's agents. And the thing is, what the alarming part is to me is that whilst you may think that Melbourne's affordable, and if it's nothing but affordable right now, if you were to look at it and say Adelaide, Perth, Brisbane and Sydney are all more expensive by median price than Melbourne, it's hard to believe as our one of the largest, if not the largest capital city in Melbourne. But then when you start to go and have a look at the real estate and then you run the numbers and you go, what's it cost me to buy this property? And what's it going to cost me to hold this property? And that's where I think the lack of due diligence is quite scary. People are buying properties and not realising, one, the yields are low, two, the compliance is horrific. Land tax kicks in here at $50,000, where if you cross the border into New South Wales, it goes up to $1 million. And then things like stamp duty are more expensive than any other state. You start to roll all that into the equation, you go, you know what, Victoria's not looking great. So, and that's before you even really start to get into the economy and worry about, the amount of debt we've got, our crime waves and all those types of things. So I think my point is, I think Melbourne presents a lot of opportunities at the moment. Do not get me wrong. And whilst I've just sat there bagging it, it's not that it's that you shouldn't come and look at Melbourne or look at Victoria. Absolutely, there's great opportunities here, but you just have to do the due diligence. And I feel like I'm seeing that there's a lack of due diligence in the Victorian market from a lot of interstate buyers right now. Yeah, got it. And look, to be clear, I think I hear, because that was one of my concerns, particularly, in Perth, we're getting 4.5% to 5.5% rental yields. Yeah. Whereas, comparing that to say Victoria, we're looking at 3%. You know what I mean? So, but the thing is, then you start to look at your net rental yields, and your net rental yields are far higher than ours too, because of the holding costs. Yeah, definitely. And I guess because let's just say, for example, because a lot of our clients are in the mines, right? So they're on typically bigger income. So, if the potential's there, the holding cost, there is a bit less risk for the bulk if you can afford to hold it, by all means. And if the potential's there, it makes sense, because again, if we're going to get an extra 1 or 2% worth of growth, that pays for the holding cost, long term. But I think where a lot of the concerns coming from, and really, I guess fundamentally my concern. One of my philosophies, actually, do you know a guy by the name of Jocko? Have you heard of Jocko before? The only one I know of is the Collingwood Football Club, pretty much the club cheer squad lead, but that's the only Jocko I know of. Got it.
Definitely not that guy. So Jocko is a like ex-Navy SEAL commander, right? So this is going back to the Iraq War. Now, long story short, he wrote a really good book a couple of years ago called Extreme Ownership.
Oh yeah, no, no.
Yeah, cool. So that's Jocko. So he has a philosophy, and this is a philosophy that I try and embody. There are no such thing as bad teams, only bad leaders. And fundamentally, the responsibility is always that of the leader. And when I look at, let's just say, for example, the leadership of just say the state government, I got some red flags flying, to say the least, right? And I think that fundamentally is kind of where people's concern comes from, and being willing to take the risk of, not to say that we'd recommend an area with high crime, right? But if an investor is willing to take the risk of, let's just say a harsher demographic, lower yields, they can see the potential. The concern actually comes from leadership, and it's like, how do we deal with that? How do we, in one sense,
if you think about it, if you're a share investor who's an investor, not a speculator, and you're looking at businesses that you believe are going to be great long term, one of the first things you do is who's leading that business. Are they doing well? Are they running the business in a way that's going to keep them efficient and financially sound, and all those types of things? And of course, if you were to take that same thing onto property, the first thing you've got to do is who's running the state, who's running the country. And I can tell you now, in Victoria, you wouldn't get the pass.
Right. Okay, fair enough. and I guess the pass.
But the problem that we've got here as well is we don't have an opposition leader that can do any better, which is a tragic place to be.
Well, I think unfortunately that's in a lot of places, not just Victoria, unfortunately. And look, without getting to the weeds of politics, so I think that the hard part, and again, it comes back to leadership. And I guess this is probably, in my mind, the big risk of, let's just say, Victoria as a whole. But I mean, because the other interesting, I guess, kind of queries we are also getting is around, say, Sydney. Mm-hmm. Sydney for the last probably since 2010, really. They've been probably the most expensive city in terms of median price. They've also, between 2010 to 2020, they had the strongest growth as well. Mm. What are your guys' thoughts on the direction of, say, the Sydney median house price and really where that's going? Can you guys still keep seeing that moving?
Yeah, look, the big driver, as I mentioned at the start of this, the big emerging markets that we're seeing right now in terms of sales volumes, again, and that, as I mentioned, is the precursor to price movement. The biggest movers right now are Melbourne, Sydney, and Brisbane, but primarily driven by unit markets.
Units.
And that's really, and for all the reasons I mentioned before, that's really what we're seeing in terms of, the buyer activity is going into those types of investments or in types of homes. This is a big change from what we've seen in previous editions, where it was actually the smaller capital cities that were showing the best sales activity growth, and they're often in decline right now, much like a lot of regional markets that have now softened as well. So it is a very interesting time, and as I say, in my career, I haven't seen units act like this like we've seen in the last couple of years. But I do believe that it's a trend that's here to stay. It's not something that's just going to be a blip on the radar. It'll be here for a little bit and then move on. It's a trend because of the way that we're choosing to live. It's a lifestyle choice. It's a safety choice. It's an affordability choice. These are the reasons that I think that will continue. And simply, we're not building enough new dwellings either.
Yeah, and I think there's also a density part to that as well, because, even speaking, I was in Brisbane, and Sydney for that matter, a couple of weeks ago. And, it's the same thing. They're from what I can sort of tell, a lot more of the governments are trying to be a bit more proactive when it comes to the town planning and density, and I think people having the expectations of a 600 square metre block in the suburbs is just, they're gone. No chance. I definitely get that. And what are your thoughts on say Brisbane at the moment? Brisbane
again is another one that is driven. The unit market is really pumping along. I think it's an easy topic to instantly just say, well, because of the Olympic Games, it's going to do well. But if you look at, if we were to go back the last, I'm going to say 8 years now, Brisbane's had some really strong growth, and especially that picked up after, in those COVID years and beyond. But they had the handbrake on for a very long time before that, so they were coming off a very low median price to begin with, and we've seen some really strong growth. We've now taken over Melbourne. But what we've seen is that a lot of that has been off the back of a lot of government spending, a lot of infrastructure that's gone into supporting that. And I ironically hadn't been to Brisbane for a couple of years, and then I went to a PIPA conference and was up there for I can't remember if it was a national conference or whatever it may be, but went up there for that. And I hadn't been to Brisbane for a few years, and I couldn't believe how much it had changed. It's a real city when it previously had felt like that bigger, regional town. It really had changed overnight. And I look at that now and I think, Christ, if we've done that in the years leading up to the Olympic Games, and whilst we've known of the Olympic Games for a long time, it doesn't take you long to look and see when the real decisions around where the infrastructure and money is going to be spent for the Olympics. And of course, for a lot of people, when they think about Olympic Games, they think about sport, facilities. I mean, that's such a small thing. It's about the transport to get people around these cities. If you think about historically what's happened with Olympic Games, think of all the major cities that have had them, your Tokyo, your Athens, LA, that's about to happen, Paris, etc., London. Brisbane's not a capital city. It doesn't even come close to some of those ones that I've just mentioned, right? So for a city like Brisbane to host such a large event, there's going to be a lot of money that is going to be poured into road, rail, hospital, all those types of things. So it's going to continue to reinvent that city over the next, between now and 2032. And that's typically where you see most of the capital growth. We tend to see when major projects or major events like this happen, you sort of get three waves of growth. When you first get the announcement, leading up to it, and then slightly afterwards. But most of it happens before the actual event itself.
Yeah. Now, being the case that most smart property investors are long-term holders, and again, I'm not going to get into the weeds of trading just yet, or we'll get to that in a second. But I mean, would you say that most people would want to start considering liquidating prior to the games, or do you feel like it still would be a good long-term hold?
Look, it's one of those things that, there's a lot of people that say, buy good real estate and never sell. Okay. Now, I don't actually take that approach. My thoughts on real estate are it's there as an asset that can give you choices when you need it, right? So I had a customer through the hotspotting business where we do strategy sessions, and they came to me and they'd been buying in some of the locations we've been recommending for some time, and he'd done very, very well, building quite a strong portfolio. But he owned a chiropractic business here in Melbourne, and he came to me with this portfolio, and he goes, look, I like having this portfolio, but it's a lot of work to have a lot of properties, and there's a lot of headaches that come along with it. And he goes, I'm just sick of having to pay so much of a mortgage at home. Do you think I should sell some? And I said, listen, this is a great thing that you're great choice that you now have. If you want to be debt free on your home tomorrow, you could. And of course, what you can do, it doesn't have to be forever. It doesn't mean you can stop investing. But as soon as you can wipe out that owner-occupied debt at home, and I'm a big believer that if you've got mortgage at home, that's what you've got to get rid of first. So if you've got properties that are in markets that have had that really strong growth, and of course, when you sell, you will have some CGT expenses and sale costs to entertain. But if you can wipe out your debt at home, and then you can recycle some of that debt into investment debt and start again, by all means do it, because your borrowing capacity is going to be very strong by having no debt at home, and then you can go and start that whole process again. I had a client in Sydney who was in a similar situation where they had two corporate jobs, like I'm talking nearly $1 million a year between them, but they had large debt at home on their owner-occupier, $13,000 a month in mortgage repayments, and they had another investment property in the same suburb as them. And again, that was probably another property worth $2 or $3 million. They still had a little bit of debt on that, but when they sold that property and wiped off their debt at home, do you know how easy it is to sleep at night when you don't have that debt on your own home? It's life-changing. So I don't have that belief that you never sell. So what I would say is, the people who are great at real estate, and what I mean by great at real estate, I mean great investors and people that know how to use real estate well, understand that markets are cyclical. If you understand that and you're able to identify where markets are in the cycle, it's like that share trading thing, knowing to, buy low, sell high. And, real estate's not the sort of thing that you can do that regularly on, because the cost to do that is too high. You can sell down shares and buy new ones in a day and very little transactional costs. But in real estate, stamp duty, agents' costs, capital gains, you can't do that regularly. So I'm not suggesting for a moment sell because you've had good growth. That wouldn't make sense. You sell because it's got a purpose for that sale that's going to help you get closer towards your wealth goals.
Yeah, perfect. Now, when it comes to like what you guys are seeing in terms of trends, right? In terms of like what, let's just say, our competitors would be doing, or what other companies are doing out there. One of the things that I've noticed, it does appear that people are trying to reinvent the wheel, like constantly, right? In terms of co-living properties, those sort of multi-ocs, when it comes to developments, when it comes to buying and, renovating and flipping and stuff like that. Have you guys seen any new trends in terms of types of strategies that you feel is working really well right now?
Look, what I can say, we started a report about 2 years ago called the Pulse Report. It's one of our most popular, especially for the industry, one of the most popular reports, because it takes a different approach to what we usually have with our normal hotspotting reports. Now, our normal hotspotting reports is very much a long-term focus. The higher they are up in our reports, like in our national top 10s and things like that, means the timing is right to be buying these to get short-term too. But the Pulse Report, we started that report when interest rates were on the way up, and obviously cash flow become tougher, and a lot of people were after higher rental yields. So what we did is we selected all of the top 50 locations that we selected had above a 6% gross rental yield, but it also met our empirical formula, meaning it was still in a good sized population, had heaps of infrastructure, all the things that we look for, low risk, etc., and had really strong prospects for capital growth. Now, because we released that report 2 years ago, Terry just finished doing the analysis of going back through that top 50 to see where they're at. And of course, we need to make the top 50 for the next selection. And two interesting things came out of that. One, very, very difficult for us to find 50 locations in Australia that can still offer you above 6% rent yields that meet our empirical formula, because these markets have grown so well. And it meant that we have had to change our formula. We're about 5.7 is our starting point, and you can still go up to 7 or 8%, but it's a lot tougher to find those markets because of the growth that Australia has seen. Now, the second part was when we went back and looked at our first edition of the Pulse, and we said, all right, let's analyze how these markets have performed. Now, some of these markets, and I mean a vast majority of them, in 2 years have seen over 50% growth, and some as high as something like 80%, right? And this is markets that we picked that had those higher rental yields. So in answer to your question, there's always, Terry and I talk about this quite regularly, the people that have this formula in real estate where they go, I just do this type of location, or I just do this type of product, or I just have this module that I use for all of my clients, and this is it. They're the ones that don't understand change. And they're the ones that I think are quite, have a very risky plan, because things like if you, were looking at Melbourne and you only sold in Melbourne, well, how did your customers deal the last couple of years? It would have been pretty tough, right?
Yeah.
In terms of markets where groups that just sell apartments, there was plenty of years where that was awful. But now there's plenty of people who just like houses, and now they're struggling to win deals in so many markets because I can tell you there's and I won't mention names, but obviously there's a course that people can do to become a buyer's agent here in Australia, which in the last couple of years has produced 10,000 people that have gone through that course. And we estimate there's probably 2,000 to 3,000 new buyer's agents in the country that weren't there a few years ago. And the reason I raise that is because that's the case, and a lot of the time people have the same formula. I want a 5% rental yield, I want a 3-bed plus 2 on land, and these are the markets that tick the boxes. You've got all of this competition piling into the same markets. And the only way to win those deals is to pay more. And that's a really concerning thing. So what, in answer to your question, the smart people and the smart buyers agents and investors are understanding that change is occurring, and you need to pivot with that change. So people that, and I'll give you some tips that I've given some of our buyers agents that we mentor. I've said, if you understand that if you can buy a unit, and I'll give you an example, you go into, Toowoomba or a great market like Albury-Wodonga or something like that, and you're struggling to win a deal on houses, I can tell you now, if you jump into the units, you'll get a better yield. They're outperforming on capital growth in a lot of these markets compared to houses too, and you'll have less competition. But the struggle that most people have is they can't overcome the fact that a unit, could possibly outrun a house on capital growth. It's happening. Now, unit doesn't mean high density. It could be a townhouse, a duplex on, a set of two. Maybe it doesn't have a body corp. There's all of these things that you can look for, and typically you're going to be much closer to all that infrastructure and amenity that you want in a good investment. These are the things that I'm seeing that are pivotal for most people that are either wanting to be a good property investor or a good buyer's agent, is understanding that these changes need to happen. Otherwise, you're going to get lost with the crowd.
Yeah. And so when you talk about the fact that the market changes, because I know you're talking about, let's just say houses versus say units. Are there any other changes that you can see at the moment?
Well, I mean, the first obvious one is market, right? And to emphasize the fact that markets are all cyclical, I mentioned before, at the end of 2024, Perth was showing 15% growth. Melbourne was minus 3% at that time. We fast forward to, the end of August, which is the end of September. And, Perth is sitting about 7%. Darwin, which was sitting at 0% in December last year, is now in double digits, 10.4%. We picked that market 9 months ago too. And Melbourne is now in positive territory, showing about 3 or 4% growth. So this is all in the same period. And if people say, the media often likes to say, what's going to happen with real estate prices next year? Well, they're sort of grouping it as an entire country. And of course, when you do that, you'll see last year, the national market averaged 5 to 6%. But when we do our analysis, we actually go and say, don't show me markets that haven't had at least 50 sales in the last 12 months. And instantly what happens is we go, wow, there's 4,500 markets that had double-digit growth last year, so double the national average. But because we're looking at all these tiny little rural towns that no one will invest in, of course, but in all of those areas where prices are so cheap, they're dragging down the median or the growth. So in answer to the question around what's changing is, if you understand markets are cyclical and you can see the changes, you can be buying early in cycle. And if you buy early in cycle in markets that have got good long-term prospects for growth, you get the best of both worlds. You get short-term fast equity gain and long-term growth.
Right on. And so I guess part of what you're really saying here is having a more of a national outlook versus, like you're saying about the buyer's agents kind of being stuck in their group of suburbs in, say, Sydney or Melbourne or whatever the case is.
Well, that's fine if you're an owner-occupier, but I don't think it's a good model if you're specialising in investment, because the markets don't continue doing that forever. They go through cycles, they go up, they plateau, they might go up or down. And if you just specialise in one particular market and you need a certain amount of sales every month to stay in business, you're selling in declining markets at times.
Yeah, absolutely. Now, is there anything that you can see going wrong for the property market at the moment? And this is more stuff that you're seeing, whether it's with your clients or competitors or stuff like that, of stuff that's really not working, or things that you think that a lot of people are considering but probably shouldn't.
Look, there's an aspect of FOMO that I think is starting to come into play again, off the back of maybe some improved sentiment and some interest rate cuts. And what tends to happen is when you see a bit of FOMO in the market, what people start to cut corners, and they I've been outbid on the last 6 properties that I've done, and then you start to cut corners by dropping a finance clause or a building in pest when you might need that, or you should always have the building in pest. But if you're not doing that proper due diligence, then all of a sudden you can become unstuck. So people become impatient. And again, down here in Victoria, anecdotally, we're speaking to agents and they're saying we had 35, offers on a particular property. This is what you were seeing in Perth, in the last 18 months. offers of, 20, 30 contracts being signed, and the top 5 or 6 of them have no clauses whatsoever, no due diligence. And I think that's a pretty scary place to be. So, I suppose the buyer beware, make sure that you don't get impatient. You understand that every time you get a no, you're just getting closer to your yes.
Yeah, I hear. Yeah. And I mean, that is one thing that, particularly now with the first homeowner guarantee scheme, we're kind of seeing people just like running into, and it's like, hang on a second, pause, think.
Yeah.
So yeah, I definitely see that.
Yeah.
Now we obviously spoke about Perth. When it comes to let's just say the smaller cities, so between say Darwin, Hobart, Canberra, and obviously I understand that there's 3 completely different markets as well. I have found a lot of people in the past have been quite resistant to the smaller markets. What are you guys' thoughts about those 3 cities?
Look, Darwin's an interesting one. I think it's a very small market, right? So you're looking population sort of 70-odd thousand. So there's not a lot of depth of stock to begin with. So I've always said for that particular market, whilst we believed and still believe that it'll be the best performer this year on capital growth, it's still quite a risky market in terms of how deep can it go? Like in terms of right now, if you go and have a look at what properties are selling for versus the valuation, the market's just moving that quickly that values can't keep up. So people are, prepared to, pay whatever they think the property's worth. But there's a lot of substantial evidence to say that that's what the property's worth. But the good thing is that the yields will support. Right, you're getting fantastic rental yields there. Now, the reason that we picked this market 9 months ago, or whenever it was, is we could see that it was changing. It's off the back of 20 really bad years that Darwin's had, but we could see change happening. The amount of money that's getting poured into that in terms of infrastructure is like nothing else around the country. It's really exciting, and there's a lot more jobs there bringing in, skilled employment for, not necessarily mining, but gas projects and things like that, and that's bringing in a lot of extra people needing accommodation. We're just not building enough homes up there, so I believe the growth will continue there. But in terms of investment, you want to be in there pretty soon. Like I wouldn't be holding out too much longer if you were going to have a play at Darwin. So that's the first one. Hobart is an interesting one as well. We are seeing, we saw a bit of a spike in sales activity there in our previous edition. It's sort of slowed a little bit since, but I think if they sort of struggle a little bit with affordability there. Like it's quite an expensive city for what it is. It's a unique one. We often say in real estate you want something with scarcity. And a lot of the time, a view of the water is scarce. Well, everybody in Hobart's got a view of the water, so it's an interesting market to be in. Canberra, I think, has still got a long way to go, especially, unit market. There's just they went really heavy on building there, and I think they're still struggling to swallow up some of the stock there. They had incredibly strong rental yields there for a number of years, and then they delivered a hell of a lot of units, and that started to slow down, which means price growth has been really slow there as well. So those are the 3 that you talked about. The other one that we sort of we have touched on, rising markets, so markets that are really strong in terms of rising sales activity. But one thing that investors often bypass is they almost look at the top of the clock and the bottom of the clock, and what are the markets that are rising, what are they declining, and they make decisions based on that. But one of the things that's really interesting about our Price Predictor Index is the classification for consistent markets. Consistent markets are ones that don't boom and they don't bust. They just tick along. And what that means is the sales activity is quite consistent, as the words would suggest, but also the price growth is. It just ticks along, getting really strong growth. Moreton Bay and areas like that for many, many years. Bendigo was a consistent market. There's been, in terms of sales volume, some of the pockets of North Adelaide have been really consistent markets as well, and it's not really showing any sign of slowing down. So consistent markets are also one. You don't constantly have to be looking for the one that you're going to shoot the lights out with. So I'd say that's another little tip that, you don't have to be in the most competitive markets. Look for the markets that are actually showing really good, sustainable growth.
Look, to be fair, they're probably the markets that we prefer.
Yeah.
Again, broadly speaking, just because, again, I have seen this in the past where clients have gone ham on a really great growing area, a really great growing city, but then they're hamstrung once the market plateaus there. Whereas if they can get something a bit more consistent, it just gives them a bit more room to move as time goes on. So that definitely works. And so Tim, at the moment, let's say that you could wave a magic wand, right? And, let's just say in quotes, fix the property market. Now, part of where this question is coming from is the fact that, as an immigrant, right now, immigration's kind of out of control. Our building industry certainly can't build enough houses at the pace that we need to nationwide. And it also does seem like that the banks are also somewhat chokeholding money in a lot of ways. And again, this is all my own personal opinion, right?
Yeah.
If you could wave a magic wand and, fix the market, what are the things that you guys would do?
Well, I mean, I suppose it depends what fix the market means. I mean, slow the market down. That's not what I want to do in the areas that I might hold property. But in terms of how do you make it, how do you slow it down so that it doesn't affect affordability and allows more homeowners and investors homeowners and first home buyers into the market? And the first thing I would say is on the topic of, people have got an opinion, or certainly the media has an opinion, that it's the investors that are driving up prices and making it unaffordable for homeowners. And there's certainly some markets where I'd agree, but as a general rule of thumb, that's not the case. I mean, at any one point in time, investors typically account for about 30% of transactions, as do first home buyers. So it's not, and the ABS stats, which have, been widely publicised for a long time, saying that, most investors in Australia, 72% of investors only own one investment property. I think that stat probably needs to be updated because there's certainly been a lot of investor activity over the last 5 years. And that figure, I believe, will have gone down in the sense that they probably own more than one property now. But with that said, I think how do you fix the housing issue is probably the biggest question. And there's two answers that I would say could fix that with the magic wand. One is we need to look at the way we build houses. I mean, our productivity here in Australia is lower today than it was in the 80s in terms of how many houses we build and how quickly do we build them. It's dreadful. The second part is, so what I mean by that, we should be looking at things like prefab and all those types of things in other ways. And we've just got so much compliance now. Like, I mean, we've got all of these rules to make sure that houses are safe, but we're at a level that is not seen anywhere else in the world, and that obviously slows down productivity, slows down how long it takes to build a home. So there's some things like that and red tape that we need to loosen in order to. I mean, I'm all for a safe house, don't get me wrong, but let's just not go crazy with it. The second one is 50% of a house and land package. That price, 50% of it goes to taxes, right? And, the government loves to, sting property investors or sting property owners. And because of that, you've got 50% of the median priced home or house and land package in Australia right now is close to $1 million, right? That's madness. To buy a block of land and build a house, $1 million is the median price in Australia now. And 50% of that is tax. You take that away, I'll tell you what, it's a hell of a lot cheaper price to be buying a house and land package, isn't it?
Yeah, big time. Yeah. Let's not even start talking about taxes, mate, because you'll start turning red. But no, that's all good. And I guess last question, Tim. Let's say for today in 2025, what would be your number one tip for our listeners?
Oh, that's a big one. Tip, I mean, it might be a bit cliche, but I think the main thing you want to do is don't buy into that FOMO, as I mentioned earlier. Do your research. Use professionals. I mean, something that I've said to people for a long time is Terry Wright has been in this business and researching real estate for 40 years. Every time he buys a piece of real estate, he uses a buyer's agent. Right? Why does he do that? He doesn't lack the knowledge. The reason he does it is, one, time, two, you get somebody else to stress test it and has a second set of eyes on it. And it's somebody who's dedicated to doing that all day, every day. You just can't compete with that. And, that to me is not just for buyer's agents. I mean, it's like you wouldn't go and take your tooth out. You go to a specialist, right? So you go to a mortgage broker, you go to a good accountant, you go to a good financial planner, and don't be afraid to pay for advice. Australians, for some reason, don't like to pay for financial advice, yet it's it's a false economy to be doing that type of thing. You want to get the best result, go and see the best people. And if I often say, if you want a good accountant, see 5 of them before you pick one.
Right. Love it, man. Love it.
Yeah.
Well, I appreciate your time as always, Tim.
Always good to have a chat about real estate, Corey. Look forward to doing it again soon.
We'll do, mate. We'll do. All the best.
Yeah. Take care.
Bye. See you, mate.